Buying a home is exciting, but what happens if your loan falls through before closing? It might feel like the end of the world, but don't panic, there are solutions. Today, we'll talk about why this happens and what you can do to get back on track. A loan can fall through for several reasons. One common reason is a change in your credit score. If you take on new debt, miss a payment, or open a new credit card, your lender may reconsider your approval. Another reason is a change in your job or income. If you switch jobs, lose your job, or have a drop in income, lenders may no longer feel confident in your ability to make mortgage payments. Sometimes, the issue isn't with you but with the home itself. If the appraisal comes in lower than expected or major problems appear during the inspection, the lender may not want to move forward. Debt can also play a role. If your debt-to-income ratio goes up before closing, it could put your loan at risk. And finally, simple paperwork mistakes, like missing or incorrect information, can cause delays or even a loan denial. If your loan falls through, the first thing to do is talk to your lender. Find out exactly why it happened. In some cases, a simple fix, like correcting paperwork or paying down a small amount of debt, can get your loan back on track. If that's not an option, ask about alternative loan programs. A different type of mortgage or a larger down payment might help you qualify. If the issue is related to your credit or debt, you may need to work on improving your financial situation before reapplying. Paying off outstanding debts, fixing errors on your credit report, and saving for a bigger down payment can increase your chances of approval. Another option is to look for a new lender. Not all mortgage companies have the same guidelines, so even if one lender denies your loan, another may be willing to approve it. If the problem is with the home's appraisal, you might be able to negotiate with the seller to lower the price or cover some of the costs to keep the deal together. In some cases, bringing in a cosigner with strong credit and income can help. A cosigner agrees to take responsibility for the loan if you're unable to make payments, which can make lenders feel more comfortable approving the loan. While you can't always prevent a loan from falling through, there are steps you can take to avoid common mistakes. Before closing, avoid making big purchases, like buying a car or new furniture. These can change your debt-to-income ratio and impact your loan approval. Try to keep your job stable. Changing jobs or reducing your income before closing can create problems with your lender. It's also important to make all of your payments on time and avoid opening new credit accounts. Even applying for a new credit card can affect your approval. Most importantly, stay in touch with your lender throughout the process. If anything in your finances changes, let them know right away so they can guide you on the best steps to take. Having your loan fall through before closing can be stressful, but it's not always the end of the road. By understanding why it happens and knowing what steps to take, you can still make homeownership a reality. For more information, be sure to connect with us. We're here to help you every step of the way.
Thanks for watching. Whether you're buying your first home or refinancing your existing home, Mortgage and Credit Pro is dedicated to providing you with the best in service and products. We are here to answer your questions and help you through the process. You can reach us online at www.mortgageandcreditpro.com. We look forward to working with you.